Hey everybody, Prudence here with our trader user group for free weekly roundup. This is for the trading week ending January 27th, 2017. What I've got on the screen here is the daily chart of the E-mini S&P 500 futures. You can see I got a lot of activity on this chart. I'll clean it up here for you in just 1 second. But first I wanted to show you a little bit about just the tough movement that we're going to need and some of the follow-through that we're going to need to keep up with these levels here. Now, in looking at this chart, you can see this huge move that we've made off the Trump bounce. I don't need to talk about that because everybody's aware of, where we've moved from down at these levels down here, this huge move up to this level here. I mean, everybody already knows that. We hit all-time highs a couple days ago at 22.9950. Just short of the 2300 level for the S&P 500 futures, much like we did with the Dow, where we set at 19,999.63 for a while before we finally broke the 20,000 barrier. And speaking of the 20,000 barrier, I am so happy we got through that. I got so sick of hearing all these people on these business channels talking about it. I mean, give me a break. But be that as it may, this is kind of where we're sitting right now. You can see with this big movement like this, folks, I can tell you, and having done this for many, many decades, when you get a movement like this, can it continue? Yes, but not without some consolidation or some pullback, just a little bit of a respite here. Now, we did have a little bit of that. Let me clean up this screen for a second and take everything off and then just kind of show you here. Again, looking at this chart, and let me just try and get it down here to about 1 year here, and I'll just kind of zoom in so that you can see the year that we had here. So if I just go in from January to where we are right now, so this is 2016, and you can see where we opened up 2016 right around this area here. All right, so that was the open price for 2016. And then we immediately, January and February, we came down and we really tested the lower areas here. And right in this area here, I was getting our members long. I saw an opportunity here and we had a lot of fun. But you can see there were many instances where we were in the red for the year because this was the opening price right here. And then you could see that we actually went into the red here on the night of the Trump election, and then in our chat room at 2 in the morning, I was having our members, or at least we put out some longs, some buy orders in the futures market up in this level here. My belief being that if we take that out, we're going much higher. And sure enough, that's what we did, and we went much higher. And then we took out the prior highs that we made in the summer, not without a little bit of a retest. And then here we are right up here at these levels right up here. But you can see this move right here off of the low of the Trump inauguration, or I'm sorry, the Trump win. We moved up. We had a little bit of about a 2-week period here going into the end of December, and then boom, in January, we've come up, and then we've just been right in that area there, and then we just had a breakout here this week once we got over that. Now, will that breakout hold? If I zoom in just a little bit here, again, just to kind of give you guys an idea of what we're looking at, I can widen this out, but I'll keep it fairly flat here for you, and then just show you we had just a 1-day close. Actually, the close, if you look at the closing bars, they were here and here. Okay, and then we opened down here, went lower, but we actually closed right there. We had one little close right there, right on the bottom. So that was just an intraday move below the low. So we were essentially right in this area here. And then finally, here in January, we had the first close above here on this day, this week, where we just really gapped up, and now we're just kind of sitting here like that. Again, I would not be surprised to see us come back into this tighter range here, running from around 22, let's call it 2280 roughly, down to about 2240. Okay, I would not be surprised of that at all, because we spent really going back to around the first week in December around 12.5 until we finally broke out here, you know, around January 24th area. So you could say that we were here for about, what, 6 or 7 weeks, roughly? You know, 7 weeks in this tight range, then we finally broke out. Folks, when we consolidate for a long period of time like this, then we finally break out, inevitably you have a retest of that level just because it's a significant level. And you can see this volume over price right there. So that's where all the volume sits in. So we got a lot of potential buyers down in this area here. And again, we're just doing a lot of turnover though, buying and selling. So we haven't really gone anywhere. And then we got a lot of potential buyers waiting beneath us down here around the 2140 area like this. So if we break low here, there's not a lot of volume, meaning potential buyers that could catch the price. I don't believe we will go much lower than this near term. I think near term, we're just going to kind of continue in a sideways choppy motion. We may go up a little bit, we may come down a little bit, but I'm really not going to make heads or tails of it right now. You can also see that there was no bullish divergence from this high here to this high here, but you can see when we made new highs here, we're setting up for some divergence, and that divergence doesn't tell us how far down the market will go. It does say we can expect some weakness. We're in the thick of earnings now. Companies that aren't hitting earnings or getting punished, those that are beating earnings go up, but not like they normally do. So that tells me that there's still a lot of downward pressure here. Part of it is because they're waiting to see if the Trump administration can follow through on their promises. Now, there have been a lot of executive actions here in the U.S. For the Trump administration, which indicates he's going to attempt to do what he said he's going to do, but getting it through the Senate, getting it through Congress is another story. So the markets are still more or less in a show me state. I think we had some unbridled enthusiasm when we took out the 20,000 level in the Dow. But be that as it may, I do not think right now I see too much more upside, at least near term. We could have some late rat brain traders coming in because they watch their business journal of the day. That would be the National Enquirer or the USA Today paint by numbers newspapers, and they may come in and just say, hey, I'm late to the game, let me come in, I don't want to be left out of the party. Meanwhile, they're the people selling to them are the people that have been long down in this area here and just happily taking profits off the table. We're going to see how this thing shakes out. Of course, nobody knows, but that is just, you know, what I'm looking at here. And if we come out to the weekly chart just to show you the run that we've been on, and let me just take it all the way back right here to 2009, right? This is the 2009, March 6, 2009, when we hit our lows, and then boom, we're moving all the way up here, going back on this weekly chart. We've been on a very nice run. I mean, just really great, and very little in the way of stopping us from coming down. And you can see as I draw this trend line right here like this, you know, the lower level, I don't see us going much lower than that trend line. I guess probably it'd be helpful if I just kind of drew it in, wouldn't it? So you can see right in that area there, that is the trajectory right now of the markets. And if I put my cursor on this line here, you know, right around the 2100 level, which makes sense on the weekly chart. Right? This would be the trajectory that we've maintained. And every time that we come down, you know, we come down and that level there, we don't break. Actually, it was actually formed right there. I touched that right there. And then you can see we came down and hit it again. So we're maintaining this trajectory. There is a huge support point right in that level right there, which is around the low 1800s. So I don't see us getting there in the next 6 months, but I do see us doing some more choppy and then maybe some downward action like this, and then just kind of holding the fort here, possibly retesting this upsloping trend line here. Now, I am still sticking, and I'm on record as saying that I believe we're going to have anywhere from a 25 to 40% pullback. But I said it was going to be 12 to 16 months. I think the Trump administration, with their very aggressive tax cut plan and their way to really jack up corporate profits and make it easier with regulation and things like that, could really extend that 12 to 16 month time frame out another year and a half, about another 6 months or so. So figure still 12 to 16 months out, I could see a larger unwinding of a lot of this run here. Remember that this has been my area right here that I would call that big pullback to around 1600. And that would be the area that to me would make sense to clear out a lot of deadwood. You could see here, now this goes all the way back to the late 1900s. 1900s. Yeah, about right before the dot-com bubble. But you can see here with the dot-com bubble, all of that 1572. Typically when you have something like this and you're going back as long as I'm going back with these tops right here, that would make sense. The possible pullback zone, right? And the other thing on this is that if we come in here and let's just say I want to measure it and I want to do a percent move, and we look at the percent move here, we're looking at about a 31% roughly move. And that would make sense to me because most bull or bear markets don't stop at 20%. They overextend. The average bear market is usually over 26, 27%. So this is a 31% pullback. So I believe that we're probably, and you know, the higher we go, the bigger this pullback, but I believe this is going to be our resting point when we do come back somewhere in this zone, give or take, you know, 50 to 100 points up or down in this area here, because you never can really call it. But that's kind of what I would see over the next year to year and a half. And we got a lot of potential existential threats that could get us there. Just a lot of them. And again, looking on this weekly chart here, as I blow it up, you can see one thing is that from this high point here to this high point up here, we have a cross there and we got a cross there. So what that basically means is there is absolutely zero bearish divergence. So that just means this move from alpha here to here was a very valid move with a lot of new money coming in. And it's not just U.S. money, but it's money from Japan and Europe as well, because the U.S. is the market where everybody wants to be right now. So that tells me that this is a valid move. And any pullback over the next 3 to 4 to 6 weeks, if we have one, is going to be met by buyers stepping in and giving us another thrust up before we have a wider pullback. Okay, so now I'm stepping it out through the first 6 to 9 months of this year. But I just wanted to give you an idea of my thinking. Okay, so if we come back to the daily chart, let me take this back off the screen and then let me put my indicators back on that I have. You can see right in this area here, this big wide color bar that goes left to right across the entire chart. That was my weekly resistance level going back about 2 years. And you can see here that I said we typically will come up and hit it, and we hit it right, timed perfectly. It's calculated between these two black bars, and we spent, you know, and this is a daily chart, but we spent over a month there, and then we spent almost a month here. So several months just trying to inside this resistance zone to be able to break back up. So to me, that means that this could also be a really good resting point to take us back, maybe even move into the red a little bit for 2017, and then buyers will start to step in. That would mean we would take out the 50 EMA. Do I think that's going to happen in the next 2 weeks? I don't think that's likely, but I do see softness in price, because unlike the weekly chart, as you can see, there is a little bit of divergence here on the daily chart, and I honor these divergences. If we get across the MACD down at this level, that would tend to signal that we're going to hit one of these upsloping lines here, and then the 50 EMA, which happens to be sitting at the 2017 open price, right, of 2240 roughly. So that's kind of where we're sitting right now, guys, on the S&P 500. Now, and if we look at the strongest index, which is Nasdaq, right? Here's the Nasdaq 100 futures. You can see here that we're butting right up against the highs here. You can see the 2017 open price, the dot-com bubble high in green. You can kind of see where we're sitting right now. and there is no bearish divergence here at all. Even looking at that or looking at the RSI, no divergences. A little bit oversold, but we can stay oversold for quite some time and still continue higher. So I believe that you know, in order to really bust a move much higher than this, we need new money coming in, and I just don't see a lot of big money coming in at these levels. I think big money wants to play, but I think they want to see a little bit more how the Trump administration and the policies will be able to be played out in the Senate and in Congress, because that's what's got to happen to get these laws passed, tax breaks and some of these other things that Trump wants to do, which would be very stimulative to the asset prices here in the U.S. markets. So that is, and the one that is doing the weakest right now, the index that's the weakest is the Russell. If we look at the Russell, you can see here, and let me just clean this chart up a little bit for you. You can see with the RSI down below, we're working off, we had a little bit of this divergence come into play here, and now we're working off, and we're sitting right at about the 52 level in the RSI. So 52% of the time the markets are closing above the daily average trading range, above the 50% point. You can see how the 50 EMA held it very nicely here. So I'm going to make the technical assumption that right in that level here, it's a key level for us, right around 1343 for the Russell. So I think that would provide some support for us. The other thing that I'll show you here in this, and it's just, it could signal some bit of a bullish move. If I were to draw that like this, right, you can see that that is a bull flag. You can see, boom, ups the flag, and then we move like this, and the odds favor a break to the upside. And then the measure of the break to the upside is the width of the channel here, right? So that would put us back up over 1400. So this is a bullish pattern. So we've got a bullish pattern in the Russell. We have some sideways consolidating pattern, but with a slight grind higher in the Nasdaq 100 futures and in the E-mini S&P 500 futures. And then, of course, if we look at the Dow futures, well, let me just get back here real quick for 1 second. I wanted to just also indicate here on the Russell that this was the best performing movement of any index, and then it's just now working off that big move up, right? And if this turns lower and then the MACD goes back below the zero line, that'll start showing some negative nature to this. And if we look at the volume over price, right, you can see all this volume over price here like this. And there's a lot of dry powder in this area here. There's not a lot of potential buyers. If this thing should break here and it starts a run down, again, I don't think we're going into a big pullback. If we do, at least in January and February, I think it's going to be relatively minor. Keep in mind, the FOMC meets this next Tuesday and Wednesday. They come out with their interest rate decision. The Fed Fund Futures is forecasting maybe a 3% chance of a rate hike. Even in March, they're forecasting about a 32% chance of a rate hike. But we'll get their meeting minutes. We'll see what they're talking about. I don't think they're just going to, in my mind, of course, it's just a guess, that they're going to confirm their 3 interest rate hikes for the year. Most of their interest rate hikes come at a quarter end. So, and then March being the first quarter end meeting that they've got coming up. So anyway, net, things seem to be okay right now in the markets. Now, I've had our folks mostly long off this Trump bump, so we're just taking advantage of some of this sideways action here. But for those of you that did not get into the market, they were all doom and gloom. And I've got folks that have been trying to short this market going up, and they've just been on the wrong side of the tracks. Eventually they'll be right, but trying to, you know, ride the horse in the direction it's going is what my granddad always said you want to do. You know, you want to face forward, and that's what we're doing right now. Now, we've got some dynamics coming up over the next 60 days in the market that could change my opinion, but right now this is kind of what I'm seeing. So if we come back and let's go back to the Dow, because I was on my way to the Dow before I rudely interrupted myself. And if we look at the Dow, you can see all these indicators on the screen. You can see some of these extensions off prior pivot highs. So you can see right up here at 22.19, and then this extension here that we hung up at 19.834, right? So these are just areas here that we've hung up for quite some time. But I do believe the Dow is also set up for very nice bearish divergence right here. From here to here, none at all, right? But from here to here, this final thrust up tells me that we can expect some weakness to sideways action. That just the bearish divergence, again, doesn't say how far down we're going to go, but it does say expect weakness. So we can expect that unless some existential news event crosses the wire. That's what we're going to expect. So sideways, a little bit of chop, maybe some slight divergence in some of the indexes, some up, some down, a little bit of sector rotation across these indexes. But net, the market is still in a bullish frame of mind. I'll tell you one other thing that's got me a little bit worried here, and I took out a long in volatility. If we look at the VIX right now, let me get the VIX up here. I got to find it. Where are you? I know you're here. The VIX closed at 1058. You can see right here, let me just widen up. This is a daily chart of the VIX. You can see right here, we hit the 2017 low. By the way, this is also the 2016 low, the 2015 low. We haven't been this low since 2014. And if I just take it back a little bit, you'll see what I mean. Right in this area right here, we hit it, I don't even think it was 2014. Yeah, it was right down in that level there, just slightly lower than the low that we hit here of 1030, right, back in 2014. And then just going back a little bit, you can see here, and again, I'm just really moving the daily chart back here so that you can see, not since 2007, February 2007. And with the exception of this one little soundbite here in the summer of 2014, we haven't seen these lows in the VIX in quite some time. And as you can see on this daily chart here, what happens when it gets down this low? Well, it's not pretty, right? When the VIX gets down this low, the odds favor a big move to the upside. Right, and it's usually not just a grinding move. It's just a shotgun blast out of the cannon, a la the Ringling Brothers circus kind of thing. Right, now it doesn't last very long. It could last a week or two, but it's just a shot across the bow. So again, we had it even right here. Boom, a shot across the bow. So right here, folks, we can expect a shot across the bow. Again, I can't tell you the day. Trying to time a volatility pop is damn near impossible. So what we do is we go long volatility. Now, what I had our members doing is going long either the volatility futures or using VXX calls. But you got to understand how to trade volatility. Otherwise, you're going to get caught in a negative roll yield and you'll get in trouble. If you're not a member, I've got some wonderful educational webinars out there on trading volatility. But needless to say, we went long volatility. Now, if you look at my chart, I also have it color-coded. These mean things. These are just levels here that if VIX trades in one of these zones here, it just shows a capital allocation model and credit spreads and things like that that you may or may not want to do depending on what color zone that you're in. My members understand this, but that's kind of, you know, where we're sitting here on the VIX. So I'm long volatility right now. And if we come down here and we look at the bond market, well, the bonds is doing what I said it was going to do. You guys probably remember from last weekend, I said the bond market is trying to finish out an Elliott Wave 3, 4, 5 pattern. Here it is right here. And it may not finish it out, but the odds favored it too, right? So if you look back, we have a 3-leg, a 4-leg, and then somewhere down in this area here is a 5-leg target. You can see that the 200 EMA right in that area, I mean the 50 EMA right there, it came right up to it and gave it up, right? A lot of sellers in that area there. So should we come back up into this zone right here, then I'm going to enter a short position, right? I may enter, if we move up a little bit higher, I may pick up some, for our members, we may go short the bond market and sell some puts out of the money to, kind of help support the trade here. So, but there'll be a number of different ways that we're going to play options against a short bond position. So anyway, this is kind of what I'm looking at for bonds. You can also trade TBT or TLT, right? In the currency market, well, the dollar is appreciating. We've had this nice little move lower, and now we're getting across in the MACD. Down below, we had our bearish divergence right here. In this particular case, the bearish divergence signaled weakness again, right? From this high to this high here, the trigger, the sell signal was right up in this level right here, and then the get out of the trade was right in this area right here. So that was a good run for those that took it. And now we're sitting here, and where can this go? And I'm looking at a possible area right up there, okay, which would be bearish the euro, bearish most other world currencies, with the exception of the British pound. There's going to be a point where a stronger dollar is going to start impacting corporate earnings, but I don't think it's at this point just yet. And if we do look at the British pound, you can see right here, I've been one of these guys standing on my roof yelling as loud as I could that I do like the British pound to the upside. It's going to be choppy. We're in this tight little box right here, this range, post-Brexit. But I do believe longer term, the pound is going to be much higher than where it is now. Short term, it's going to be very choppy in this area until it works and sorts itself out. But good opportunities in the pound. And in the yen, I think we're finding some bottom here in the yen, but like the bond, because the yen kind of goes in the direction of U.S. bonds, the long end of the curve, the bond market, you can see the pattern looks just like bonds. The chart looks just like bonds. You can see bonds had trouble with the 50 EMA, so did the yen. We're probably going to go a little bit lower, we're going to bottom, and then we're going to look at doing a rise up. Remember, the Japanese yen is a global place of safety and a carry trade, and the more the interest rates go up, the harder it is to use as a carry trade instrument. But I do believe that we're going to probably be finding a bottom here, which would then push the yen higher, which could push bond market higher and equities lower. Gold, I'm also on record as saying gold is going to finish the year higher than where it started. But at this point in time, I'm just not ready to or convinced that gold is ready for its breakout move. We're still in this 3, 4, 5 Elliott wave pattern. We couldn't hold the 50 EMA. We certainly couldn't break out of the 200 EMA. Both the 200 and the 50 EMA are going almost flat with each other like railroad tracks. So we're still in a kind of a consolidated mode. I don't think they know which way to go. So let's just kind of watch and see how this kind of plays itself out. Both India and China are big buyers of gold, and when India did their currency, taking some currency out of the market to kind of get away from this underground cash economy there, that hurt gold near term. It caused a little bit more downward action in gold. China also, with their Lunar New Year, they're on vacation, holidays, almost the whole week. I don't know how a large country can just kind of shut the financial markets down there. Their index is down for almost a week. It's really insane. It'd be like shutting the Dow or the London FTSE or the DAX down for a week. It just doesn't make sense to me. If China wants to play in the big boy league internationally as a global market, they're going to have to be a little bit more open with their markets. It's insane. Mostly politics is what got them in right now, nothing else, and stupidity by a lot of people. But anyway, that's kind of way off the topic. That's for another session. But this is kind of where I'm looking at gold right now. The other metal that could be really interesting, now you haven't heard me talk about it very much, but is copper. You can see we had this divergence here, and I think copper is going to be in one of these modes where it could sell off some. We've had this nice move off of the Trump election here, and then copper just went through the roof, and then we're coming down. The 50 EMA caught it perfectly. We're moving back up in what could be an Elliott wave 5, and then you get into these ABC chop patterns. And if you're an Elliott wave theorist, I'm not, but I like using it because I just combine this with other indicators to either support what the other indicators are telling me or tell me there's something different, which then tells me that the market is really untradeable until all of these indicators traders start to line up for me. Not untradable, but on a longer term basis, it would be untradable. Short term, you can always day trade or swing trade it. So this is kind of what I'm looking at right now. Possibly a little bit higher, Elliott wave 5, and then kind of a really chop ABC pattern. But I do like copper. That's going to be part of the infrastructure build out. The other one is oil. By the way, we're in gold and we're in oil right now in our secret trader, and we are making money. Oil, here's another one that is probably a little bit of more upside opportunity than downside. You can see the 2016, we're in the red for 2017, rather, not 2016. You can see the open, the high, and the low for 2017, but we're going to be in this tight range here for a while, and we're taking advantage of it. I just don't see the impetus to see oil get up much more than $57, $58 a barrel, but by the same token, I see $44, $45 a barrel is a pretty good support point, because you can see down here all of the volume over price. So there's a lot of buyers down at this area down here really supporting this thing. So I don't see, I see a wider trading range here for 2017. And then, of course, there's the ag market. We're playing the ag market right now. Meats, we played OJ to the downside really nicely. OJ had a typical counter trend move that you normally see. Look at that big move there. A lot of buy stops were taken out. I do believe on a short-term basis this may run up a little bit, and then it's going to roll over again. And guess what? We're going to want to stand here and take the trade. We've been short OJ most of this whole time. We made great money in this. I think to the tune of over, if we add up, we've been in and out 3 times, but I want to say to the tune of about $8,000 or $9,000 per contract is the profits we've had in OJ since we've been trading it in Q4 of last year. Just this one commodity. Right now, you can see OJ when it typically falls, because a lot of shorts get into the market, they have these counter trend rallies just like this, these big counter trend rallies, and then what happens is you get the buy stops being taken out, and then once it gets up there and all the buy stops are taken out, then guess what, there's no more people to go long, and then it rolls back over and makes a newer low. Then you have a counter trend rally, and then on we go until it finally finds a point where it says, okay, right here there are more new money coming in because it's getting low enough to support new buyers, new net longs in the position. Right now we're not there yet. All right, you can see there's no divergences here. You're seeing the rapid decline in the 50 EMA. The 200 EMA is also rolling over. So I do believe we could have one of these here where we come up and we roll over. Remember, the lower we go, the more violent and extreme these counter trend rallies, just because more and more shorts come into the game, and they come in late, right? We were in the game here, and we were in the game here, and we were in the game there. So I'm getting our folks in early, but you're going to see these counter trend moves. I just take my profits, stand aside, let it do what it needs to do, and then when it rolls back over and it looks ripe, we jump back in again. So that's a little bit about where the markets are right now, everybody. If you're not a member, we're starting off 2017 really great. I highly encourage you to come in and check us out. You can do a trader user group combo offer, which gets you into our secret trader and our user group, or just into our secret trader. It's your choice. Check us out. We're getting a lot of folks coming in. We're having fun. We're making money, and that's what it's all about. I think 2017 is going to be a really bang up year. Another one for us like 2016. It's going to be a lot of fun. Take care, everybody. Have a great weekend. And members, I'll see you this Sunday night when we go over our trades in the secret trader room. Have a good one, everybody. Ciao now.